Hello everyone. Good morning from this part of the world, and happy Friday to everyone in the house. I want to welcome us to our final Forex Morning Mastery session of the week. I'm thrilled to have both our loyal followers and new participants join us today as we prepare for the final trading day for the week and, of course, for the month of February. Reflecting on our journey, we have achieved commendable progress. Beginning the year with $1,000 portfolio, we've grown it to approximately this morning it's around 1,190, marking a 19% increase. And despite encountering a couple of losses in the last 48 hours, I'm optimistic about recouping these losses and aiming to surpass the $1,200 mark by the end of today's session. Now, as we approach the month end, it is crucial to recognize the unique trading dynamic at play. Historically, market often experience increased volatility and potential profit-taking activities when it comes to the last trading day of the month. And to capitalize on this, today we are going to be ensuring that our trades align with end of the month trends and also prepare for potential profit taking activities by market participants. And of course, we are going to be keeping abreast of economic indicators, news releases that could influence market movement, and of course, given the potential heightened volatility that could take place, we want to be ensuring that we have a well-defined risk management strategy in play. Now, moving into the market dynamic, the recent developments have significantly shaped the financial landscape. Was it on Tuesday, and of course yesterday we saw the we saw President Trump at a meeting. We saw that on Tuesday he had a meeting with President Macron, the president of France, and of course we saw yesterday, that is Thursday, we saw him having a meeting with the Prime Minister of the United Kingdom. And of course this has influenced the market dynamic a little bit, where we saw this Prime Minister's introduced discussions on potential tariffs and trade deals, and of course this geopolitical event can impact currency pairs and commodities, influencing the strategy for this week. Then also we have been monitoring three financial instruments, of course, which includes the USOILSPOT, which obviously has been going through ups and downs during the course of the week. And we also have the USDJPY, which is currently the Japanese yen has been losing ground against the strengthening US dollar, pushing the USDJPY a little bit close to around the $150 mark, which we are going to be deliberating on in a moment. And of course, the movement in the US dollar actually is the strength of the US dollar is further supported by the Bank of Japan stance on interest rate, which we will be talking about in a moment. And of course, the strength of the US dollar has also significantly pushed the price of gold to the downside. So for those of you who are fans of the USOILSPOT, the USDJPY and the XAUUSD, you want to stay tuned in, as we are going to be delving into the market dynamics from both technical and fundamental perspective to identify potential trading opportunity ahead of today's trading session. So as we navigate today's session, we are going to be considering these factors, aiming to make informed decisions that align with current market dynamic. And with that being said, as always, the first thing we normally do, of course, is to keep tabs with the fundamental factors that has been and will be influencing the sentiment in the market for this week. And based on the asset we are looking at, that is, we're focusing on the US All Spot, the USDJPY, and the XAUUSD. We want to be looking at economic features from both the United States and the Japanese economic docket. Now, through the course of the week, we've had a bunch of speeches from Fed officials. We had President Trump's speech on Monday with Macron. We also had yesterday, Wednesday stroke Thursday. We saw that with Prime Minister of the United Kingdom. And then we also had what else? Okay, we had the Consumer Confidence Index report, which came in on Tuesday, giving us a massive decline, which obviously truncated the strength of the US dollar. However, with the recent development now, it appears that the dollar appears to be gaining some traction thanks to the core PCE report we saw yesterday, which came in above 2.7. We came in 2.7% above the market expectations of 2.5%. Then we also saw the durable goods order, which showed some resilience. It grew by 3.1% for the month of January, above the previous month, which was at a deficit of 1.8%, and of course higher than what market participants were expecting. Then yesterday was another important day where we saw the gross domestic product annualized for quarter four, showing that the US economy is still resilient with a growth of 2.3%, just like what we saw in the previous quarter. But there was a little bit of downside in terms of the labor-oriented data, as we saw the initial jobless claim count coming in way higher than what market participants were expecting, giving us signs of weakness in the US labor market. And of course, I'm still yet to see the dollar react negatively to this, and this might be due to some positive or expected positive expectation by market participants. Now, later yesterday, we also saw data from the from the Japanese economic docket, where the CPI data came in way below what market had expected. It came in at 2.9%, and of course, this influenced the Japanese yen negatively, and of course, the US dollar are taking advantage of this drop down. Now, for today, Friday, February 28th, the last trading day for the month, we are looking at the core PCE report, which is coming up at exactly 1:30 p.m. UTC. That's about 2:30 p.m. local time. So we obviously want to be looking forward to this data. And one thing we should also take note of is that the core PCE is considered to be the Fed's preferred inflationary gauge data, and of course, whatever this outcome today will tell us the inflationary pressure in the United States. And from what is on ground right now, market participants are projecting a 0.3% for the month on month and 2.6% for the year on year. A little bit higher than the previous month data, but we look forward to see what the actual data will be. So if the data comes in higher, it will definitely influence a positive traction for the US dollar. And if it comes in lower, we may likely see some contraction in the US dollar. Then for today again, I think the Ukrainian president is going to be in the United States, so we obviously want to be hearing the conversation between President Trump and President Zelensky later today. That's about 6 p.m. UTC. Of course, this is also going to be playing a significant role in the US dollar market dynamic. So with that being said here, we will be diving right into the business. And as always, the first asset we are going to be taking on this morning is going to be the US All Sports. And of course, we've had some interesting development in this market since the beginning of the week. Remember, at the beginning of the week, we were buying the US All Sports. We were able to take some profit off this bullish move. Let me show you quickly. Let me see. I'm trying to locate my tools here. Hold on a second, please. So I'm not sure why this is not coming up. Can I refresh this page and let's see? It's taking a while for it to load up. Okay. So I'm looking for my tools. Excuse me. Now this is getting to I wonder what is happening here. Without my tool, I can't do anything. Okay, finally it comes. All right. So, sorry about that. So I was saying here that at the beginning of the week, we were looking at buying the US All Sport right above the $70.42 area. And of course, if you remember, we had already had the buy position prior to the breakout of the $70.42 level, and of course we were able to capitalize on this old 80 pips move before that strong bearish momentum came in, taking us out of that position with a moderate size of profits. And of course, I did tell us on Wednesday that I missed out on the strong bearish move to the downside before this whole consolidation happened. And of course, after monitoring the character of price action for about 12 to 15 hours, we were able to spot a range bound structure here on Wednesday, where we were looking out for price to either break out the resistance line to give us an opportunity to buy, or break down the support line to give us an opportunity to sell. And luckily enough for us, price did break down the support line multiple times, came back to retest structure to further emphasize the strength of the sellers on Wednesday's trading session. And we saw how price dropped significantly from that area, moved over 60 pips thereabout on the first sell position, and about 35 pips on the second sell position before the bullish traction came in, taking us out of that position with a moderate size of profit. I personally, on the US All Sport, I'm yet to gain anything significant in this particular market, as yesterday I was off my workstation and missed out obviously on the strong bullish move back into our key level at the $70 mark. And for those of you who were lucky enough or fortunate enough to be part of this bullish move from yesterday. Well done, kudos to you guys. And it is high time we start looking at new possibilities today. As you can see, as soon as price got into that $70 mark, remember our key level for the week, we have continued to see strong selling pressure in this particular market. And of course, we obviously want to understand why this is happening so that we can make a well-informed trading decisions around this particular area. Currently, crude oil prices is around its $69.40 barrel. In today's session, during the UK session as we are right now, and it appears it will continue to edge lower after the previous gain we saw during the later part of the New York session, during yesterday's trading session. And for me, I'm beginning to, after looking at the financial feeds this morning, I think the fear of a slowdown, which has been escalated by tariff threat from the United States and signs of a US economic downturn, are putting downward pressure on oil prices. Now, besides this, Trump's announcement of a 25% tariff on Mexico and Canadian goods, including a 10% levy on Canadian energy imports, which of course includes crude oil commodities, and this is going to start March 4th, and he also announced 10% duty on Chinese imports too as well. And of course, this is raising concerns about potential retaliatory measures and reduce global trade, which could negatively impact the demand for oil commodity. And for me, this is a very strong signal that we could see price of oil continue to the downside. And besides this, there is also the revocation of Chevron's license to operate in Venezuela, which if we all know, Venezuela exports approximately 240,000 barrels per day of to the US, and this could disrupt over a quarter of the country's oil output, potentially tightening global supply and supporting oil prices. So even though the dynamic is showing some downturn in oil prices, we cannot ignore the potentials that buyers can also come into play. And if you also take into account the uncertainty surrounding the OPEC Plus decision to proceed with planned oil output increase in April, that's about 2 months from now, amidst fresh US sanction on Venezuela, Iran and Russia, it may lead to maintained or reduced production level, potentially supporting oil prices. So right now, I would say that we are within a potential indecisive phase where market participants need to be very cautious before making any aggressive bet at this point in time. And as technical traders, given the current market dynamic, we want to closely monitor geopolitical development, especially related to trade policies and sanctions, as they can significantly impact supply and demand balances in this particular market. And of course, we are also going to be considering the heightened volatility that might come into play. Hence, we want to be implementing risk management strategies like setting our stop losses accordingly, and obviously, like I usually do, diversify our portfolio in this current time. Now, looking at this current structure here, after considering the character of price action in the last many hours now since the breakdown of the $70 mark, I think about 1 2 3 4 5 6 7 8 9 10 11 12 hours, I was able to identify a simple trading setup on the 15 minutes time frame, and this led me to trigger a sell position this morning. So if you look at the trading panel at the bottom of your screen, you will see that I have two sell positions on the USOILSPOT, one at the 69 dollars 45 cent level, and the other one at the $69.52 area. Now, why have I sold the US All Spot at that juncture? Well, if you look at the structure closely, following that strong impulsive move that started yesterday, and as soon as price got into the $70 mark here, this was our key level for the week, we saw selling pressure resume again. And of course, from our technical standpoint, whenever we have price below our key level, we want to be looking out for selling ideas. Now, even though price is below the key level, I saw something here that looks like a flag pattern or a pennant, depending on which perspective you're looking at it from. So we have the impulse leg, and we have the consolidation, which evolved into this potential flag pattern. And as you all know, we expect that price will break out the resistance line to continue the uptrend, but instead we saw price break down, which for me is tending towards the downside. And as a result of this, I had a sell position somewhere around here, and then added another one right at the breakdown of the $69.45 level. Though price is back into the entry zone, I want to see how the market is going to be reacting to the structure. I still believe that as long as price still remains below the structure here, we are still in for a downtrend move. So for those of you who might have missed out on this potential, you might want to be preparing to sell below the $69.45 level, as the current structure still projects a bearish expectations in this market. So I still look at a bearish. I still take on a bearish bias in this market based on the current structure, and looking forward to see price drop maybe into where it's topped after that strong bearish move on Tuesday, I think, and looking at a minimum of 90 to 100 pips thereabout. So let's see how this is going to play out today. However, if price does not move as we have expected, and instead price demand continues to increase in the market due to concerns over global due to potential disruption in this Venezuela oil landscape and OPEC's production decisions, the only condition that will make me buy the US All Spot is to see price action take out this descending trend line here. So I want to see price break above, retest the structure before I can even consider buying the US All Spot, which I doubt will happen. But if it does happen, we want to be on standby to capitalize on that opportunity. So in the meantime, we maintain a bearish bias, but if we get taken out of the sell and price breaks out of that descending trend line, we want to be preparing to buy the US All Spot. So we have a simple trading setup where that area within the $69.70 level and the $69.45 area will be our center of focus today. If price remains below the structure, we feel comfortable in our bearish bias, but if price climbs above the descending trend line or the $69.70 area, we will be looking at buying ideas. So this is my simple view on the US All Spot going into today's trading session. And of course, if you have any questions or you need some clarifications, feel free to let me know in the comment section. So I will take about 5-10 seconds off. Let's see if there are any questions whatsoever before we move on to the next asset on our watch list. And do not forget to give the video a thumbs up. Thank you very much, guys, and see you soon. All right. So, in the absence of no questions, I hope we are all on the same page. Mark out the structures accordingly. This is what we are going to be using to navigate this market today. So we have identified potential for selling ideas around this area, and should the market dynamic change from these bearish expectations, we are preparing to buy the breakout retest of that descending trend line. So I wish us all the best of luck on the US All Spot trade. So the next asset we are looking at this morning is the USDJPY, and remember, we are yet to place any sell on this commodity since the beginning of the week. We have been buying, looking out for buying ideas, and of course, remember, the reason why we were looking out for buying potential was basically because of the structure we saw on the 4 hours time frame. Now let's look at that 4 hours time frame quickly, and let's see what we actually saw in this market at the beginning of the week that made us feel comfortable that buyers are likely going to be taking over this market. Though it took a while, but at the end of the day, we can see the bullish traction finally coming to fruition. Now look at the structure here on the 4 hours time frame. It's quite obvious that since the beginning of the year, the market has been on a downtrend, and of course, as a result of this, we did mark out this descendant trend line, as you will see, has a key driver of this momentum going into this week. And of course, one thing I also mentioned at the beginning of the week is how this descending trend line has supported buying pressure. You can see as soon as price tested the trend line, we saw buy pressure resume from that particular area. The same thing also happened at the beginning of this month, and by the end of last week, we saw that as soon as price tested the trend line, we begin to notice buy pressure resume from that particular area. So as a result of this, we were using that trend line as a support area for a potential bullish scenario. Then besides this trend line, we also had our key level we also had our key level right around the 149.00 area, a level which had played a significant role in the last 2 to 3 years. Remember, we talked about this on the daily time frame. So this is the daily time frame, and look at how beautifully, in fact, we went to as far back as 2022, and look at how this level at one point was a resistant line. It became a support line. Then in the last 6 months thereabout, it has continued to be a buying niche. Look at what happened here in October. We saw what happened here in December, and of course in February 2025 we saw how it became difficult for sellers to break through that particular structure. So with this in mind, we had the opinion that this could be a platform to push price further to the upside. And the only condition we said here at the beginning of the week that will make us sell is for this key level to be broken and retested to the downside, which is yet to happen. So you can see it's more of looking out for buying ideas on the USDJPY. Now let's scale back down into our 1 hour time frame, which is the execution time frame. So at the beginning of the week, we had this beautiful range bound structure. As you will see, price was initially confined within the 149.400 and the 148.850. Though we had some buy positions at the beginning of the week which never lasted long. We had one here, we had another one around here which went into break even, and this one of course on before Wednesday's trading session went into a loss. But during our session on Wednesday, I did mention that we shall continue to look out for buying ideas at the breakout of the 149.00 area, and not until yesterday we finally saw that breakthrough. As you will see, I have a buy position already running on the USDJPY around the 149.420 with about 74 pips in profit at this point in time. And for those of you who had capitalized on that opportunity, well done and kudos to you. So at this point in time, it is high time we moved all stop losses. Let's secure some profit at this juncture. So I'm looking at 149.750 or 720 thereabout as my stop loss area for this one. I will just do that right away because we might be seeing some high level of volatility during today's trading session. So stop loss moved to the 149.710. And as at this morning, while I was looking at the current market dynamic, I was able to identify a new structure around the 150.100 area. And of course, this bullish momentum can be attributed to the reduced Japanese government bond yield. In fact, the last 4 days now, due to the Japanese government decision to reduce the it is called the 25/26 budget plan to 115.2 trillion and a new bond issuance to 28.6 trillion Japanese yen. This has led to a decline in the Japanese government bond yields, diminishing the appeal for the Japanese yen at this point in time. In as much as the anticipation of Bank of Japan rate hike is still on the table, the risk of sentiment and lower US Treasury bond is still there, I still strongly believe that the path of least resistance for the USDJPY still remains to the upside. Now, with this new structure we have marked out here at the 150.100 area, I would like to see price come back and retest that structure for me to add another buy position. So if I can see price come back, retest the structure, I will be willing to add more positions to maximize the potential of that uptrend move. So that is what I'm looking at today. I maintain a strong bullish bias on the USDJPY, and remember, we are not selling unless this key level is broken and retested to the downside. So for me, that is my simple view on the USDJPY, and of course I'm looking forward to another breakout retest of the 151.00 area to add more sell positions to my existing trade. So this is my simple view on the USDJPY for today. And of course, if there is anything new as time goes by, I will be updating us on my Telegram platform. If you have any questions, feel free to let me know in the comment section. So I will take another 5-10 seconds off. Let's see if there are any before we go ahead to our final asset for the week. Stay tuned in. All right. So in the absence of none, I wish us all the best of luck on the USDJPY. Please remember to secure your profits on the USDJPY as we continue to monitor price action. So moving on to the next and final asset for the week. The final asset on our watch list for this week is the XAUUSD, popularly known as the gold spot. And of course, the last 60 to 72 hours has seen price nosedive thanks to the strengthening of the US dollar, elevated inflation due to the core PCE report we saw yesterday, and of course the Fed's hawkish outlook. Then we also saw the US economic growth data also expanded at a 2.3% annualized rate in quarter four of 2024. The figures suggest a resilient economy, which may prompt the Fed to maintain or increase interest rates. And of course, you know this what happens whenever interest rate increases. The gold commodity becomes very expensive for other currency assets to buy, and this could further put downward pressure on the gold commodity. And back to the beginning of the week here, we were actually looking at buying the gold commodity. Remember, we bought the breakout of the 2,941.50, which obviously did not do very well, though we had about how many pips moved there. We saw about 150 pips move. We took some profit from that one before we had the stop loss hit here after taking the break at a gain of the 2,940. And since then, that is Tuesday's trading session, price action had continued to nosedive. So we talked about selling the breakdown retest of that key level at the 2,925. As you will see, this sent price crashing to the downside. And during our live stream on Wednesday, we identified a simple trading setup on the 15 minutes time frame. Remember, so we said we are going to be using this descending trend line to help us navigate this market going into the second half of the week. And you know how we use our descending trend lines. As long as price remains below them, we continue to look out for patterns and structures that support selling ideas. And of course, we sold the breakdown of the 2,907 on Wednesday, as you will see here. Added one more position at the breakdown of the 2,896. I had my TP around the 2,870, which got me taken out with a significant profit. We had 360 on the first sell and about 200 on the second sell. Now this morning I placed another sell after considering the character of price action in the last through the Asian session, which shows that the recent data in the United States economy, that is the core PCE, indicates that U.S. inflation remains high and supporting the case for the Fed to keep interest rates steady or even consider hikes in the nearest future. And we all know, like I said earlier, higher interest rate increases the opportunity cost of holding non-yielding assets such as gold, commodity, silver, and the likes, and potentially leading to a decrease in its appeal. Now, for me, I strongly believe that the path of least resistance for gold remains to the downside. But what we want to do today is to see how will this run through. Will price action come back to retest the trend line before jumping to the downside, or are we going to be seeing price just continue to crash from here? Or is it possible that we could see price break out of this descending trend line to incite a reversal setup going into today's trading session? Well, for us to navigate this market, and of course given the interplay of these factors we've talked about, there are a couple of things that we also need to consider before jumping into any aggressive bet at this point in time. One, we need to keep a close eye on the upcoming US economic data releases today, especially the core PCE reports, as they can influence the Fed's monetary policy decisions and consequently affect the price of gold. Then we're also going to be staying informed on geopolitical tensions such as tariff announcement or international trade disputes. Trump is going to be speaking today with the president of Ukraine, and whatever happens here, we could hear anything on tariff announcement, maybe when the press ask him questions, and this can swiftly impact market sentiment. So staying informed will help in making timely decisions. And then we should also remember that given the potential for increased volatility, it's crucial to employ a sound risk management practices going into today's trading session. So for me today, what I did was to look at the 15 minutes time frame after taking into account all of this, and this was what I was able to come up with here. So on the 15 minutes time frame, I could see that we prior to the beginning of this session, I saw a consolidation phase. Price was confined within the 2,867 and the 2,860. So I sold this area, considering the strong bearish momentum we have been witnessing in this market, and price is back into the entry point. As you will see, my open position on currently running with about is it 6 pips? Yes, 6 pips thereabout. So I still strongly believe that it will drop to the downside. And for those of you who missed out on this, I'm going to be replacing, or I advise you to place a sell stop order below the 2,860. I will also do that right away. So I'm placing a sell stop order below the 2,860 to maximize the potential of this bearish move. So let's see how the market will play out around this area going into today's trading session. And if price continues to drop, I'm looking at adding more sell at the breakdown of the $2,852.50 level. So I'm just going to mark that one out right here and then place an arrow below that structure. So I'm looking to add more sell if price action goes ahead to break down that particular structure. So I'll place another sell stop order, and of course, if it gets triggered, I will be moving my stop losses accordingly to secure this position. So that is what I'm looking at on the XAUUSD. However, if it so happens that market participants feel that the uncertainty surrounding the President Trump's proposed tariffs on imports from Canada, Mexico, and potentially the European Union, it could heighten market volatility, of course. And if this comes into play and buyers begin to gain traction, well, the only condition that will make me buy is for this structure at the 2,867.50 to be broken to the upside. That's the only condition here that will make me consider buying the XAUUSD, which I doubt could happen. But if it does happen, we want to be on standby to capitalize on that move. Now,